Welcome to Tony Byrne's View with news you can use. Tony has over 32 years of experience as a chartered financial planner and wealth manager. Tony's passion is to help you retire early and live the life of your dreams with no financial worries. Now to today's episode.
7 easy ways to gift money without paying inheritance tax. Inheritance tax, like most taxes, is notoriously complex, yet there remain a number of easy ways to gift money without paying inheritance tax, or IHT. Here are 7 of them. They all relate to lifetime gifts. Maximise the use of your nil rate band and your partner's / spouse's nil rate band every 7 years. You and your partner / spouse each have an inheritance tax exemption of £325,000. This is known as the nil rate band, or NRB. Spouses and civil partners inherit the NRB when their partners die and leave their estates to them, unless their NRB has already been used in the previous 7 years. You may make gifts up to the value of your nil rate band every 7 years without incurring an inheritance tax charge on the gifts themselves, although the gift uses up your nil rate band should you die within those 7 years. Most gifts are known as potentially exempt transfers or PETs. However, some gifts, for example into trust, become subject to a lifetime inheritance tax charge of 20% of any excess above the nil rate band, which is 50% of the standard rate of inheritance tax of 40%. These are known as chargeable lifetime transfers, or CLTs. So as long as you survive for more than 7 years after the gift has been made, the gift falls 100% outside of your estate for IHT purposes. You are then free to gift up to £325,000 and repeat the process. However, in certain cases where property is transferred into a trust, the 7-year rule effectively becomes a 14-year rule. Use the annual exemption. Everyone has an annual gift exemption of £3,000. If you haven't used last year's exemption, you can carry it forward 1 tax year, giving you a £6,000 allowance for 1 year. Make use of the normal expenditure out of income rule. This is a tricky rule because its interpretation is not defined. In other words, it is subjective. This exemption has been available since the Capital Transfer Act 1984, which was later renamed the Inheritance Tax Act 1984 and remains unchanged to this day. The Act states a transfer of value is an exempt transfer if, or to the extent that it is shown that it was made as part of the normal expenditure of the transferor, and that, taking 1 year with another, it was made out of their income, and that, after allowing for all transfers of value forming part of their normal expenditure, the transferor was left with sufficient income to maintain their usual standard of living. Make use of the small gifts exemption. You can gift as many gifts of up to £250 per person as you want each tax year, as long as you have not used another allowance on the same person. Make use of the marriage gifts exemption. The amount of tax relief varies depending on the relationship between the donor and the recipient. Each parent, including step-parents, can gift up to £5,000 tax-free. Grandparents and great-grandparents can each gift up to £2,500. Other people can each gift up to £1,000. Interestingly, you may use your annual £3,000 or £6,000 annual gift exemption as well. Gift money to charity. Gifts to charity are 100% free of inheritance tax. Donating through gift aid means charities and community amateur sports clubs can claim an extra 25p for every £1 you give as well. Once you've made a gift aid declaration, your basic and higher rate tax bands are extended by the gross charitable donation, thereby increasing the proportion of your income taxed at the lower rates. What this means is that you can claim back the higher rate tax element of your gift if you pay income tax at a rate of 40% or more. The basic rate tax component is not reclaimable by you as it goes to the charity, or community amateur sports club. Gift money to your spouse or civil partner. Gifts between spouses and civil partners are 100% free of inheritance tax. If the gift is of an asset on which a capital gain has accrued, that asset is not subject to capital gains tax until it is subsequently sold. These are 7 simple ways to gift money during your lifetime, and they are all HMRC approved. If you are considering making a gift and you are concerned it may have inheritance tax implications, do seek the advice of a tax professional. You know it makes sense.
Thank you for listening to today's episode. If you enjoyed it, don't forget to share it with your friends and family. For more information, head to www.wealthandtax.co.uk.